if it's anything like my neighbours, and it drives you mad.
Bienvenue, welcome once again to the third of our weekly property shows. This is Property Quorum, a place where we get to bash and tumble and have a bit of a bun fight, talking about topics that affect things that happen within the property industry, specifically today about your money. Today's topic is the bank changed, but what about your mortgage? And here to debate that very topic, we have Hamish McClay of Search Convey, as a search specialist and current chairman of the Independent Personal Search Agent, Silas J. Lees, the Maverick Movement, also a man who runs an excellent website called Quorum, as well as being an estate agent, so it's been through the ringer. Charlie McHugh, Mortgage Advice Bureau, newest member of the crew, but still very focused on how to get the best deal on your money. And today's topic, as I said, I'm going to set Hamish off to start first.
Well, it's fortunate we actually have two people who know far more than me about this subject. What is of interest, as I thought about it, it's much, much deeper than just that very, very sentence we speak of. Because, I mean, we had earlier this year, did we not, the situation where a large provider, of searches and various other aspects, controller of, if you like, the legal side, large number of solicitors, it fell apart with this particular sort of PM law. Massive great sort of fallout, thousands of people impacted, and it extended beyond the ricochet effect through change, and goodness knows what else could have caused major disasters. Now, certainly because of the forethought of some people within that, it wasn't as big a disaster as it could have been. However, there are ways of actually saving the situation. Now, we speak about another situation here. What happens if the bank sort of falls away? Now, there's several ways that can happen. We've currently got the Halifax, it is, I believe, which is joining, I think it's the National Westminster Bank. One of the great things about building societies, they did work in a marginally different way. So one would expect different treatment from banks compared to building societies. But what happens is somebody who's, and I mean, Charlie's a great one here with his work as a mortgage broker, to be able to sort of say, well, what does actually happen? You've got that mortgage set up with this one particular provider of the monies. What happens if that falls through? Or is it just an easy transfer? Will it transfer over easily? But it does actually, again, it's part of that bigger picture. Do we not want to be able to control that sort of situation? I think this is one of the great aspects about the work that Silas is doing in terms of Silas and his partner, sort of Chris, with Wiggyram, to try and make sure that it doesn't matter what falls out, there's something to catch it.
All right.
And that's really, can we keep the situation going? Can we actually, once that process is going, can we keep it going? Can we work it out for that seller? Can we work it out for that buyer?
Well, on that note, Charlie, welcome back to the show. Glad to have you here. The bank changed. What happened to my money?
So essentially, it's not, and I say this a lot, don't I? It's not as drastic as what it comes across as. So it's essentially the brand itself is the sort of Halifax banner, and the Halifax brand is the part that is ceasing to exist. But the Lloyds are obviously they're rebranding into the Lloyds brand. Now, in terms of current mortgages and current products that clients have, whether that's ones that they've completed and they're paying, whether it's ones that have got applications in, or ones that are sort of going through the legal work after an offer stage, they largely remain unchanged. So the only thing the products and what they're trying to get is continuity between what has been secured and what is sort of moving going forward. So everything that has been secured from a client perspective, mortgage wise, as I've just said there, will remain identical to what was secured at the time. The only thing that clients need to be aware of is that as of, I think, November this year, the Halifax app will cease to exist. So if you manage the mortgage via an app, then you will be given an email from Lloyds to register for their app, but the login details will remain unchanged. So it's just literally is a rebrand. Everything else will remain identical.
Charlie, I'm a simple bear of simple brain. It seemed to me that the Halifax, by being a building society, was beholden to its members, whereas a bank is not. So therefore, are they demutualizing?
So basically, in respect of Halifax, so Halifax themselves started as a building society, but actually it was changed to a listed bank in around, I think it was 1997, when it became, and obviously later then became part of the Lloyds Banking Group anyway. So there's very little change from that perspective in what you mentioned there, because they're a bank at the moment anyway.
All right. So is it about perception, Silas? We think they are going one way, but they're going another.
Yes, a very interesting proposition there, Gareth. And when I saw this topic come up for discussion, I actually felt quite, I want to use the word exposed, but that's not really where I'm coming from. There's an awful lot that goes on within the banking industry that many people don't realize or understand. And the learning journey that I've been on for the last sort of 10 years or so would make me sound like a madman if I actually exposed what was going on. But I think it was Henry Ford who put it best, who said that if the public generally understood what went on within the banking industry, there'd be a revolution by morning. And we have all of these different entities, all of these different financial providers. I have a lot more confidence with building societies than I do the mainstream banks. And if we start to look at some of the mainstream films that have been put out there, such as Wolf of Wall Street, or we look at The Big Short, we can start to understand and put together the pieces of what's actually going on behind the scenes within the banking industry. And it's unfortunate because it leaves consumers drastically exposed when things go wrong, because as we saw throughout 2008, banks are gambling, they're taking risky investments. We saw the whole thing unravel within The Big Short. There was the whole casino scene where people are making bets and making further bets and making further bets on further bets. And when the money Ferris wheel actually stops, that's when we see the collapsing of these different banks. And then we get all of these mortgages transferred to different entities. And we're told that they're sold. They're never sold. Okay, they're always assigned to different vehicles. And there's a whole lot more I could potentially go into, but we'd be here for several hours trying to explain what's actually going on. But to a large part, the main banks that we know about are fronts for what we call securitization consortiums. So a bank doesn't necessarily lend money, although I know that makes me sound like a madman, but if you look into it, you'll understand that it's true. They get paid a management fee based on the management of the financial product that they're managing in the background on behalf of the consortium. So
the way you're talking is that banks are in fact a glorified Ponzi scheme.
I mean, tough label to throw about there, Gareth, but I'll refer to somebody far more knowledgeable than me in my answer to that one, Gareth. There's a gentleman called Professor Werner, Richard Werner, I believe. He's the professor of banking and finance at Southampton University. Now, he is the only person in the world, as far as I'm aware, who's done the first empirical study into the banking industry. And to solve the question of where does the money come from when somebody signs for a loan or a mortgage, okay? And I've read the report, and it's as fanciful as it sounds that the money is created from thin air. And I say the money because it's not money, it's fiat currency, if we understand what we're talking about here. So this is why I feel very uncomfortable with the way the property market is being digitized and being forced down a route of digitization, because it really does expose the consumer in ways that the people pushing for digitization do not understand and will not understand, because they've not lived the life that I've lived and they've not gone through the journey that I've gone through. But I can tell you right now that the digitization of the entire consumer journey, including the long tail of financial products that follow the purchase of a house, is very dangerous for the consumer. And I mean that very sincerely, with the utmost vigor that I can muster. People don't understand what's actually going on there, and we're being pushed down this road. We're being railroaded down this road of digitization, which will leave everybody who holds a mortgage exposed if we're not careful.
Charlie, when we go for a mortgage, do the banks go to effectively their print shops and say, just print a few £100,000 more there, just create money from thin air?
Look, so I think I agree there with what Silas has said. I think digitization definitely does have its place, but I think equally at the same time, it's making sure that people are speaking to the right people, which is what we're here to do and advise them on. But I think in terms of lending now, and I mentioned this on the podcast a few weeks back, is I don't think it's a case of you submit the application or a client applies on a digital platform, whether that's mobile banking, whether that's online, whatever it may be. And it's a case of, there you go, there's the money, job done. There's an element of control. Obviously, it's very regulated now, as I touched on last time, with everything that happened with the financial crash and things like that. So it's not a case of that. Now, where they get their money from in terms of the lending options is varied for every lender. If it's a smaller building society compared to a larger building society compared to a bank. So I think from a client perspective, what I would say on the matter with this rebrand, because if we're talking about that specifically, it's very little changes from their side. If I'm just coming at it from the mortgage angle. And I think as long as they're speaking to the right people, as Silas alluded to there, making sure that there is that element of sort of a human touch to the process, I think then that is where the right advice has been given. Customers are protected a lot better. But yeah, I think it's, I think there's a lot of noise. But as I say, from a client perspective and from my side of things, from mortgages, I don't think there should be too many concerns with it, because they were already part of the Lloyds banking group anyway.
So, Silas, apparently nothing to see here.
It remains to be seen. I think for many people, I think we're waiting for the next unfolding, or the realization of everything that should have been resolved in 2008 that wasn't resolved is now starting to come home to roost. I was reading the other day that world-renowned author Robert Kiyosaki is saying that the next crash is fully underway right now in America. We will be affected by it, as we always are in these sorts of situations. And so we have a very potentially uncomfortable couple of years ahead of us if we are going to go into another global recession. And that is when we start to see these banks falling over, products interchange between different lenders. It does create a lot of uncertainty for the homeowner. And ultimately, one of the things that's always bothered me is when a homeowner signs for a mortgage, they're signing up for a 25-year term, right? And if you look at the statistics for how long that person's likely to remain within a job, it's likely that we're going to go through at least 2 recessions during the course of that 25-year mortgage term, which means a high likelihood of losing your job, ergo losing your home. And I think the process of the repossession of a property is incredibly unfair. It's massively stacked against the homeowner in many ways, and it's a deeply frightening prospect. But of course, we're pushed down the road of home ownership, which is a very British thing to have. So I think it will remain to be seen how we navigate the next financial crash, because I do believe it's underway, and that is going to be a difficult scenario to navigate for most homeowners who are caught up in these rebrands or these assignments of their mortgages to other third parties that they know not who they are. They have to then start dealing with different entities, and who knows what terms and conditions they might impose. I mean, I've heard some horror stories. There was a lady, a widow. Her husband died 3 years prior. She'd maintained the payments on the mortgage. The bank just turned around and said, we want the mortgage paying off tomorrow. Hasn't got the money to pay it off, 50, 60 grand, whatever it was. Then they came after her to try and take the house off her. You know, that's one isolated example. I've heard hundreds and hundreds and hundreds of other cases where this goes on. And what do you do about it when you're beholden to the roof over your head being controlled by somebody else?
But I mean, what Charlie's effectively saying, and forgive me, Charlie, if I'm paraphrasing, is that all we're doing is rearranging the deck chairs on the deck of the Titanic. We're not actually changing, and nothing's really changing. Am I right, Charlie?
They're already what Silas is talking about is a wider issue with you know, if a bank collapses and a debt is sold, then that's a different entity altogether. But if we're talking about the situation at hand, which is what's been announced, the Halifax rebrand, they're already part of the Lloyds Banking Group anyway. So you know, it's basically cosmetic. Say that again.
And nothing really changes.
It's basically a cosmetic corporate rebrand. Essentially, there's no sale of the debt to a third party lender where, you know, the terms and conditions are not going to change on that mortgage if it is locked in or if it has been secured. Where people will see changes going forward is when the full rebrand happens, which we anticipate to be sort of start of 2027, and Halifax is phased out completely. Then at that point, there's no Halifax products available. There's no Halifax banks on the high street. It will rebrand into Lloyds. So therefore, there is a change then in that, you know, when you're applying for a mortgage, you will be applying through Lloyds. But for, you know, if anything, it may have a positive impact to some clients, not all, because there's therefore, when they come to refinance, whether that be via a product transfer or whether that be via a remortgage to them, there's a wider range of products available under the Lloyds sort of branding than compared to what Halifax were offering. So from a client's point of view, for when the finance is due for renewal, or if they're applying for a new mortgage as of the full rebrand date early next year, actually it could have a positive impact to them. And a lot of brokers now will be having access to Lloyds. So historically, Lloyds kind of retracted from the broker and intermediary market, which limited the products that within that brand that brokers could go with. But obviously, therefore, if the brokers are having access to that, then there's more deals for clients. But I think the two issues we're talking about are separate, completely separate, because it's a rebrand versus selling debt on. But if we're specifically focused on this, as I say, there's very little changes to people apart from what I've just mentioned there.
So, Hamish, it appears very little change, but potentially there could be more opportunity, certainly with services provided.
I think so much of life is based upon sort of the approach, the consequence people would like to see. We've just sort of seen a change of government, and a number of people think what a tremendous way to go, because we have a man here who's going to rescue the world and rescue the country, and well, somehow or other there is no change there. And in fact, it's a little bit like Charlie's just sort of explaining. Really, there isn't any change within that particular situation, so worry ye not. However, there's a massive great thing going on behind what this government is trying to do, what the government is actually doing to the country, and what has been going on. I don't just put it down to this government, it's previous governments as well. For far too long, we've actually sort of seen this. But what is actually sort of happening, if we don't stop that fall down within our sort of government, the serious things are going to actually happen. But there's what it is, and of course, this is where the conversation has become very interesting. We could probably actually extend this conversation, as Silas explained there, for several hours now, because what is actually going on behind this? Who is controlling our government? Who is controlling the money that is made available to the likes of Lloyds, who actually have sort of inherited, or taken over, if you like, the building society, Halifax Building Society. And it's not the first time we've actually seen this. So on the surface, nice and straightforward, worry ye not. However, stranger things are to come. And if we're to go, I mean, Robert Kiyosaki, I mean, that book of his, which I read many, many years ago now, sort of struck me. I thought, wow, there are some things that we are not we are not made aware of when we're going through school, when we're not sort of moving through our particular sort of pathway. There's a lot of things going on in the background. And of course, we won't become aware of those until far too late on, until the damage has been done. And this is the concern. This is, so I was looking at it superficially. I thought, I mean, Charlie was explaining it too. We have it, there's no challenge. Charlie will sort you out with a mortgage because there's no challenge there. However, as Silas explains, it's what goes beyond that, the full depth. And Silas knows an awful lot more about that than I certainly know. So we'll save that for another day.
Well,
but at the moment, you're sort of safe with your mortgage, I
right.
think.
Well, world recession, bin-faced politicians, and new governments notwithstanding, I think that's vaguely cheery. Thank you so much, Charlie, for coming on and setting us straight. Silas for rattling combined cages, and Hamish being the voice of reason. All of you out there, please stick with us. Tomorrow we have Cladding Matters at 1 o'clock, which is seen to be a humdinger. We are reaching a crescendo. So hopefully you'll see more about that then. But until then, please keep your feet on the ground, keep reaching for the stars. In these troubled times, don't just shove things in the mattress. Take some advice from people that you respect. Until then, bye-bye.